welcome to you all. Thank you very much for joining us today to our Summer Property Forum. I'm Andrea Hunt, I'm partner leading the service charge accounting business stream within BDO, based in Bristol. And I'm delighted to have members of the service charge accounting team with me today. This is a bit of a different approach to our Property Forum today. I think for those of you that come regularly, we have internal or external speakers. And this time we thought that we'd bring some of the team that you do work with on a regular basis. And we're going to cover the RICS Service Charge Code of Practice Professional Statement First Edition. We're going to give a bit of an overview, and Catherine and Kate are going to lead that presentation. And then there'll be time at the end of the presentation to answer questions and really have an open discussion. And we'll do that as an open panel discussion forum. Okay, so please, lots of interaction from all of you. Compared to what we normally do, it's normally just to sort of sit back and listen. But I think today we really do welcome your feedback and your thoughts as well. So if I can just introduce you to the team, we've got Catherine Archer, we've got Chris Carl, and we've got Kate Grant. And so if I can ask them to make a start, please, and then we'll take it from there. Thanks very much.
Right. So. Thank you, Andrea. I just need to work out how we've got the clicker to slide us through the slides. Great, that's a good start. So, so as we mentioned, we're going to have a panel discussion today. So if you've got any questions as we go through them, do shout them out. But we will pause sort of midway through as I hand over to Kate, and that might be a good point if you think of any questions as we start going through, just to kind of shout at that point. So I think most people in the room here are very familiar with the RICS Code of Practice and even the professional statement. But just to give you a bit of background on that, there were 3 different versions of the RICS Code of Practice. So starting in 2006, we had the first edition, moving through to the second and third editions. And the latest version of this code, which is the professional statement, that was published at the end of last year. So hopefully most people are aware of that. And also the fact that that actually comes into force from the 1st of April this year. So that means that any properties with a year end of March 2020, they will need to have any of the provisions within the professional statement included. So what has changed in the new professional statement? Well, actually, there's not a huge amount that's changed, but there are a few changes that we're going to go through today. The presentation is going to be mainly focused on what are the items in the professional statement that would affect the production of the service charge account. So, one of the key changes is the inclusion of the mandatory requirements. So I've just got a quote there from the Code of Practice and the professional statement. So we've got the mandatory requirements, there's 9 of them, but actually the whole of the professional statement can be seen as mandatory. It's just that where it's not a mandatory requirement, there may be exceptional circumstances where you can justify that you're not following the professional statement. So there's just a quote there that covers that from the professional statement. So we've got the 9 mandatory requirements there. So I'll just take you through these. These aren't all necessarily related directly to the production of the service charge account, but obviously being the mandatory requirements, then they're very key to the professional statement. So the first one is that all expenditure which is recovered in the service charge must be within the scope of the lease. So that's going to be very familiar from previous versions of the Code of Practice. The second one is that managers must not seek to recover more than 100% of the total costs for provision of the service charge costs. Items 3, 4 and 5, that's about the publication of annual service charge budgets, service charge account and an apportionment matrix. So doing that on an annual basis is mandatory. 6 is about holding the service charge money within a discrete bank account. That might be a virtual bank account held discreetly. And 7 is that any interest earned as a result of being in that bank account is credited to the service charge after relevant deductions. And then the final 2 are about disputes. So you've got 8, which is where you've got a practitioner that's acting on behalf of the tenant. Then only the amount which is disputed should be withheld if there is a dispute. And then the final one is about correcting the service charge accounts if there is found to be an error in the service charge. So those are the 9 mandatory requirements that are new for the professional statement. And then going on directly to the items which will affect the production of the service charge accounts. So in the 3rd edition of the RICS Code of Practice, we have Appendix C. So hopefully you'll be familiar with that. That's a really useful appendix that sets out example set of accounts and all the notes and disclosures that should go with those accounts. So again, the professional statement's broadly the same as the previous Code of Practice. We have got addition of a few notes. So the first one we've got on here is insurance claims. So that is a new example note that's included in the professional statement. Now, the purpose of this is to provide clarity where the accruals basis is not being followed completely to the letter. So what we're saying in this example note is that where there is an insurance claim, you recognise the cost of the works that are being done within the period that those works relate to. And then you only recognise the credit when you have got confirmation from the insurer that you are definitely going to get that credit. The reasoning behind having that policy is that you are basically avoiding a situation where you approve for a credit and then it turns out that you're not actually going to get that credit from the insurer. So that is an accounting policy, so that would go under your accounting policies in the notes to the accounts. And then we've got landlord forward funding. So this has got an example policy that would go under your accounting policies, and also an example accounting note, which would also go in your notes to the accounts separately. So we'll come back to that at the end, just where that would sit within the accounts. So the purpose of the landlord forward funding is obviously you've got a landlord that's paying for some costs up front, usually a large project. And what we're doing is saying that it has been agreed with the tenants that those costs are then going to be put through the service charge over a number of years. So the policy is stating that that has been agreed and that is in place. And then the note is giving all the detail relating to that policy. So in this example, you've got during the year ended 31st December 2017, there were roofing works. There was a total cost of 50,000. These have been forward funded by the landlord, and now the costs are being covered through the service charge over a 3-year period. Right, so continuing with accounting policies and notes. So we've got the agreed contributions to future works. That's a new cost description under the code, which would require an accounting note. We'll come back to that later, because there are a few different options around costs relating to future works. So Kate will talk you through that in a few moments. We've also got a note on the total cost of management. So again, this is not new from the existing code of practice, but it's just pushing for a little bit extra transparency around those. So again, you can either have disclosure around management fees in the face of the service charge accounts, or you can have it in the notes to the accounts. The key thing is you've got clarity around what costs relate to management fees, and the new professional statement is saying that ideally you'd split those professional fees out between professional fees and procurement fees so that there is transparency. We've got a mention of a balance sheet in the professional statement. So this is actually a relatively new area to come up in the RICS guidance. So previously there has been a best practice requirement to have a note which sets out all of the accruals and prepayments which are included in the service charge accounts. So they're of course balance sheet items. The professional statement does go a little bit further to say that the service charge account could include a balance sheet or a cash reconciliation to promote an openness and transparency in the accounts. So we've put in here some example items that you might have in a balance sheet. So cash balances, prepaid expenses, accrued expenses, arrears from occupiers and payments collected in advance. So this is a new area that's coming into the guidance. BDO haven't seen any agents adopting this approach as of yet. We do think that it is going to be a more challenging area. It's going to create an extra reporting requirement if you were to do that, but it also may include reporting some details relating to the landlord, for example, if they owe amounts for void units, which they may not be keen on doing. So this is an area that we expect to see developing in the future. So at this point, I'm going to hand over to Kate. I don't know if anyone's got any questions that they want to raise for the panel at the moment.
Talk about agreed, forward funding of agreed expenditure. I don't know if you're going to cover later on in the talk. How you just determine that something is agreed, what steps have to be taken to get that agreement?
Let's cover that now, or should we come back to that with funders? Yeah, we'll come back to that one.
Yes, well, does the guide specify, that you have to have a meeting, give quotes?
I don't think it specifies, but we'll talk through that. We've got a few more slides on that, so we'll talk that through. Any other questions? Yeah.
Sorry, you mentioned balance sheet. Presumably, if we're going to put a balance sheet in, from your side, you want to make sure those numbers are correct, which means your fees come up.
I think there's probably an element of truth in that, in terms of there being an increased cost that someone's got to bear. I don't know if you want to comment on that, Andrea.
I think it very much, yeah, I mean, it depends on the scope of our work that we've agreed, James, but I mean, I think we would have to assess what work is involved in the extra work that would be undertaken on that.
I can see that things have to be accurate.
Yeah, absolutely, and if we were to sign off, we would have to do the appropriate work to make that judgment. In terms of fees, I think that's a separate negotiation point. But certainly for if it's in there and it's part of our scope of work that we have to report on, then we obviously would have to do a fair amount of assurance work on that.
Ordinarily, on a set of financial statement, more assurance is taken from the balance sheet than the P&L. So if we were reviewing the balance sheet, there is scope to reduce the testing on the other side and take assurance from the balance sheet, so it may not necessarily affect.
Any other questions? Okay, I'll hand over to Nathan.
Okay, so with the professional statement, just like in the code of practice, there is some guidance in terms of the classes, categories and descriptions that are included. So similar to that, in the code of practice, you've got a minimum acceptable level of reporting. So everything should be detailed at the cost, class and category level, but they do say that best practice and for greater transparency that actually those statements should go down to the cost description level as well. So there's been a few changes in terms of the classes, categories and descriptions which RICS suggests that you use. One of the new cost categories is utility consultancy. So it includes all the consultancy procurement costs for utilities. So where previously you'd have included electricity procurement and things like that within the electricity heading, this is now being separated out. We've got the cleaning and environmental cost category, which usually has an awful lot of expenditure in there, and that can be really diverse in terms of the actual cleaning all the way through to things like Christmas decorations. So they've split that out again just to give that greater transparency, and just as some feedback that they've had in terms of from the industry, what things that they would like to see so that they can code things properly in the expenditure. So you've got cleaning and sustainability, which is going to cover your normal cleaning, pest control, gritting, that sort of thing. And then there's the landscaping and the environment cost category, which will be your flowers, landscaping, decorations. There's also miscellaneous charges. So again, we quite often see things coming through where people don't actually know where to code them to or put them because they fall outside of the typical cost categories and classes. So this is a new cost class. You've got things in there such as irrecoverable VAT, external contributions. It probably won't affect the majority of the service charges, but those complex ones or the really large ones where you have got some of these costs, it means that there's that greater transparency, so they're not hidden within the other cost descriptions. Health, safety, environmental management has changed to professional fees. Again, there's no change really to what's going to go in there, it's just a difference in what it's being called, because actually there are some costs in there that aren't just typically health and safety. New cost description and re-contribution to future works, which is on my next slide, just a bit more detail about that. Again, that's come from some feedback from the industry. Typically, we see an awful lot of questions and queries coming through about accruals for works which were planned in that year that haven't taken place. And obviously, the money is going to be used because they're probably going to take place in the future year. They've been instructed and then put on hold for things like weather conditions, if it's roofing works. So they've just expanded a little bit more guidance on that just to help with, again, the transparency and making sure that everything works through in budget. And then there's just a bit at the bottom here, retail specific. So especially for shopping centres, there's quite often a landlord's contribution to marketing. And the guidance that they've just clarified in there is that you can include things like monitoring of footfall and your typical marketing costs, but when they're calculating marketing, things like events, Christmas decorations, should be included within a different code other than marketing because they're not just straightforward marketing events. So when you're calculating that landlord's contribution, which people would typically calculate at 50% or otherwise dictated in the lease, you need to take into account that you shouldn't be including things like Christmas decorations and events within that. So provision for future works, as I said, this is quite a hot topic and it's probably the thing as accountants that we see most of the time doing independent reviews, either queries, reaccruals for works that haven't yet taken place or brand new accruals for works. And it's also one of the main reasons that we'll end up qualifying on a independent accountant's report for works that have been accrued for but haven't yet taken place. So it just gives a bit of guidance there. Accruals should only be made when works or services have been completed or received in the year, but which no invoice has been received. So just instructing the works isn't enough to make a valid accrual for those amounts because the works haven't taken place yet and the tenants therefore have not received the benefit of those works or services. You've got sinking or reserve funds, which have always been there. And now there's this new agreed contributions for future work. So they're the two valid ways of making those accruals, if you like, without having to have a qualification to the expenditure. And like I said before, this has come from a lot of the fact that, yes, you might put some money into a budget, but something doesn't come through that year. The works might be taking place in the month in the following year. And this just gives a little bit more flexibility to be able to put something in, agree it with the tenants who might be completely aware that that's going to happen, and just gives that provision for something in there that those funds don't need to be returned and then just demanded again as soon as you issue those new budgets. So I'll just go over the sinking and reserve funds. Again, there shouldn't be anything different in here than there was in the Code of Practice. So a sinking fund is a fund formed by setting aside money for the replacement of a wasting asset. And a reserve fund is very similar, it's just that it's formed to meet the anticipated future costs of maintenance and upkeep to avoid fluctuations, so external cleaning, facade works, things like that. So a sinking fund tends to be much more specific in something that it's for air conditioning lifts. Where a sinking reserve fund is held, service charge accounts need to disclose within a note. Usually we'll see a sinking fund statement with the notes on the bottom. So it'll be the description of the intended purpose. the details of the separate bank account in which the funds are held, and that's one of the stipulations for having either a reserve or a sinking fund, is that the funds should be held in a separate discrete bank account. And within that bank account, there should be interest earned on those funds, and that's something which needs to be shown in the statement. So you're having the contributions to and expenditure from the account, opening and closing balances, and then obviously any interest earned and tax paid in the relevant period. And that's why it's so important to have it in a separate bank account or a discrete bank account so that you can observe those interests earned. So this is the new thing for the professional statement, is the agreed contribution to future works. So sometimes there will be leases that don't specifically allow for the sinking and reserve funds. And I think that that's quite a hazy area. I think sometimes sinking funds will be set up without much consideration of whether the lease will actually allow for one or not, or someone thinks there's a sinking fund that's been handed over from a prior agent, but actually there isn't a sinking fund that's allowed for. So this provision just gives a little bit more flexibility, as I said, in terms of the clause for works that haven't yet been completed. So if there's an agreement between the owners and occupiers to include a charge in the service charge in anticipation of future works, then these costs should be shown on the expenditure report under a separate heading within forward funding titled Agreed Contribution Towards Future Works. There'll need to be a note to the accounts, which will include the nature of the works, the total cost, so if they're only accruing, say, for half of it in the first year, the amount being charged to the tenants via the service charge. So there might be that there's a landlord contribution to some of those costs, so the total cost is going to be a lot higher than what's going through the service charge, and also a timetable of when the charges will be made. So the note in itself is very similar to where you've got a landlord contribution to future works, in it, the fact that it's just the other way around, it's the service charge that's contributing. So we've just given an example there. So during the year ended 31st March 2018, it was agreed with tenants to undertake major works to extend the car park. Work is anticipated to be completed in the year ending 31st March 2021. Total cost of this work is anticipated to be 250,000, of which 150,000 will be recovered through the service charge at a rate of £50,000 per year. So I think, you know, as someone asked earlier, there is a conversation to be had around what constitutes that agreement between the owners and occupiers. You know, is it an email communication? Is it held through meeting minutes? Is it held through issuing that as part of the budget and then that being deemed as acceptance by the tenants? So I think that there's probably a lot of conversation around that as to what will constitute the agreement to put that in place. But there does need to be that communication with the occupiers. There needs to be that agreement before this can be utilised. It can't just be put in there at the end of the year at the last minute because we realise we haven't we haven't done the works for the accruals.
That's an internal decision that agents should make, because if you don't get it in writing, tenants could potentially ask for their money back if they were to leave the following year before the works have actually happened. So it's an internal decision you need to make. What's going to be legally binding, that you can keep the money should the tenant leave after the event.
Seems that seems to be a lot of this case law.
It's also forward planning that it's not to wait to the end of the year and realise you haven't spent the money and then try and get tenant permission. It's plan ahead, even if you're not sure whether it will happen that year. If you put it in the budget, it's agreed contributions to future works. You can always do the work early. So it's planning ahead that makes a difference.
So just going back to Appendix C, Catherine went over some of the things in Appendix C earlier. It is a really useful tool in having a look at the RICS guidance in terms of what should be put into budget packs, tenant packs, and just typical examples of those. It's a good starting place. So again, this isn't really much different than what we already had in the RICS Code of Practice. It's just to kind of go over the typical content of the year-end pack. So you've got your introduction and contacts, an operational review, the expenditure variance report, which on a schedule by schedule basis should have the explanations for any significant variances within the expenditure. You've then got your service charge expenditure report, cost, class and category as minimum, but for greater transparency it is much better to have all those cost descriptions in there as well. A service charge certificate, which is signed by owner or managing agent. Typically we will see the surveyor, property manager sign those on behalf of the managing agent and the owner. The notes for the service charge expenditure report, which will include things like the accounting policies, It will have the VAT note in there, and it will have the new notes in terms of the insurance policies. Then there will be our independent accountants review report. So that will be the typical one that you've seen before, which will give our opinion. Usually it will just be a straightforward opinion, but that is where we would have a qualification if there is anything in there that we would need to highlight to the tenants. For example, as I mentioned earlier, where we had an accrual for works which haven't yet been completed and we're reaccruing that amount. And then also at the very last bit, there should be an apportionment matrix, and that should show the basis on what the apportionment's calculated, so square footage, for example, and it's split out by tenants. Obviously, you don't need to name the tenants, it will just be a reference to the unit or something like that. But that should be included within the tenant pack as well. So in the section, just back there, you've got the after service charge certificate, the notes to the expenditure report. And so typically within that, we would see obviously the accounting policies. What we already have in there at the moment is the, whether it's on an accruals basis or a cash basis. It's very rare that we would ever see a cash basis. We usually just see the accruals basis. There's obviously the new policy then for the insurance claims. And if applicable, there's the policy in terms of the landlord forward funding. And if you have got that policy in there with the landlord forward funding, you should also have a note related to it. Whereas with the insurance claims, you just need to have the policy that can just be applied within the expenditure report. You've then got your VAT note. So that one is usually quite standard across most, but will need tweaking if there's a mixed use property, or if you had any residential properties, there would need to be something in there to detail how the VAT has been applied to the service charge accounts. Then, if applicable, you'd also have the sinking or reserve fund. You'd have the note in there about the intended purpose, and then obviously the balancing charges from the bank account and the statement. There'll be a note about depreciation charges, the agreed contribution to future works, again, if that's applicable. The landlord forward funding note that will relate to the policy up above that gives the detail of what that landlord forward funding is for. Banking, commercialisation, marketing and promotions. Again, typically that's if you've got any contributions coming in with regards to those. And then the total cost of management, which Catherine went over earlier. So you've got management fees, on-site management, and then the total fees charged by the managing agent. So really that should cover anything that's within the management cost class on the expenditure report. There should be something in there that will describe that. And as Catherine said, it could be that there's a table which breaks it down in the back. Or if you've gone down to cost description level on the front of the statement and it's very clear, for example, where you've got FM fees, help desk fees all split out, you could just have that as a note at the back that explains that that's where it is on the front of the statement. So there's various ways, as long as you're showing all of those management costs and it's clear what they relate to, then there's various ways that you can do that, either on the front of the statement or as a separate table of notes. I think that then opens it up to questions, which you can ask any of us. So,
thank you very much, Kate and Catherine, and take a seat. So we spent about half an hour just giving that overview. Hopefully that's been really, really helpful. I don't think there's probably any surprises in that as well. But if you've got any questions, I have got a microphone actually. I think maybe I just need to sort of roam around and let you ask questions through the mic so that we can hear that and hear the answers from the guys here. Does anybody have any specific questions? We've already had some good questions that you've asked there, so thank you for that. All right, let me just pop down here. Thank you.
Hi. In the note you're saying about total cost by managing agent, what do you determine as managing agent? Like a lot of us have associated companies that deliver certain services. How are you determining what that should encompass?
It's a grey area, it's not clarified in my opinion in the code. So the letter of representation that you sign will have a paragraph that states any sister or associated companies those transactions are at arm's length. So from our perspective, if you've signed a letter of rep stating as such, then you may not put them in the management fee note. Some companies will decide to disclose it because they think they need to make the tenants aware. So it's an internal decision. From a BDO perspective, though, as long as they're at arm's length, it will be okay from an independent review. So it's more of an internal decision, is the answer.
Any other questions?
Just a quick question about provisions for future works. You talked about sharing the costs or gathering the capital for future works. In the unlikely event that a project cost overruns, where does the liability for those overruns sit, and how do you protect yourself from them?
Can everybody hear that, by the way? Yeah.
So generally, it will be, the quotes will have come in. So, and if there are any overruns, it's just going to be charged into the period in which the overruns are occurred. So it's best to you can budget as accurately as possible, then you're going to have the funding in, otherwise you're going to have to catch up with the funding the following year, but it will just hit the service charge in the year in which it comes in.
So the people who have contributed already will be expected to contribute more? Or?
Yeah, unless the landlord, it's already been agreed, the landlord is picking up the excess in terms of it's a fixed amount that the service charge will contribute. If they're paying for all of it, then it will just hit the following period. One question I often get asked is, can you adopt this early? And the answer is yes, but you need to make sure you adopt everything early. So you can't pick and choose from the old code and the new code. You have to commit to the professional statement. And if you're BDO client, your contracts and the letter of rep and everything will need to be updated. BDO will need to report on the professional statement rather than the third edition.
Just describe for non-accountants what accrual actually means. I mean, my understanding is that it means that the items go into the service charge account at the point of expenditure. That may not be right. So,
Yeah, that typically is what it is. So I always think about it is the fact that if I was a tenant, I would only want to pay for something that I'm receiving the benefit of. And so that's always how I would describe accruals instead of just the monetary sense of things. Is that it's accruing for something that you've received the benefit of. So whether that's a service or whether that's the works that have happened, if you just haven't received the invoice in yet, but those works have taken place, then it's putting the expenditure into the accounts to reflect that that benefit has been received.
So by contrast, the cash system is that it only hits the account when you've actually paid the bill.
Yeah.
Okay, thank you. That's helpful.
Sorry, the third edition, the big challenges we've found with we ended up doing qualifications on the back of the accruals and works done. So looking at the new edition, that seems to give us a bit more flexibility. So is that your take on it as well? And if so, then what are the challenges where do you see the challenges of the first edition coming?
So from my perspective, and working with James, is that I think the professional statement that's come in is promoting that openness and transparency, which is you're building into your own internal processes and how we actually perform our work as well. I would see it as less of a challenge, but I don't know if anybody has any other views on that at all.
I think that agreed contribution, that just gives the flexibility, yes, to put something in there, because it makes commercial sense, doesn't it? If you've received those money for the tenants and you know those works can be taking place but they've been delayed for whatever reason, it doesn't make sense to be giving those funds back to the tenants and then receiving them again. And most of the time, the tenants are fully aware of the fact that those works are going to be happening. So I think it does give that flexibility. I think the only challenge will be determining what it is in your internal processes that sort of deems the acceptance by the tenants and getting that agreement from them that that policy can be put in there. But I think it does give that additional flexibility for those. It just makes it more commercial sense rather than being dictated by whether it's legal or not valid. So hopefully it should make things a bit easier. It's just going to be working around that, making sure you've got the tenant agreement.
So the agreed contribution to future work, strictly speaking, is there to allow to collect money in advance to pay for works. So it's where the lease doesn't allow for a sinking or reserve fund, you can collect money from the tenants to pay for works that are going to happen in the future. That's its primary purpose. In reality, people are going to try and use it when you reach the year end, you haven't done your major roof work you budgeted for, you've collected the money, you don't want to give it back to the tenants, therefore we'll call it agreed contribution to future funds. You'll get away with doing that as long as you're happy you've got the agreement with the tenants.
On your side of going through the review process, are you going to want to see evidence of that, taking our?
It's probably going to go into the letter of representation and it will be disclosed in the accounts that it's been agreed with the tenant. So your tenants are going to kick up and just saying that you've agreed it with them and you haven't.
Hence promoting the openness and transparency and recording that information in the notes. We can see that. Any other questions?
Sorry, I'm getting along. If you've collected in all of these funds in advance, tenants then leave, works have been carried out, they are entitled to have a refund. How does the landlord then plug that gap? Is it rolled forward to the next year, or is it amongst existing tenants, or is it something that the landlord has to pick up?
It's going to depend on what the agreement they sign, and that will be an internal lawyers, surveyors deciding on what's going to, how you're going to word that agreement. So they may not be entitled to get it back. So if they're contributing to a sinking fund, sometimes they may get it back, often they won't get it back. So as soon as the tenants have contributed to the sinking fund, that's it, they're not getting that money back even if they leave. So it will depend on the wording of the written agreement you have with the tenants.
Thank you. Thank you, team. I am conscious of time. We're coming just towards the end of our session now. So thank you very much, everybody, for attending. And thanks for being here for presentations and responses. Could I ask you, in the usual way, there's an evaluation form for the chairs. If you could just take a moment to complete the form, provide feedback, and also we really welcome ideas, suggestions for subject matters for future forum discussions. So please feel free to complete the form, hand them in at the end along with your badges, and hopefully you found today useful. Thank you very much.